Joining us now to discuss these numbers and more is Coca-Cola CEO James Quincey. Welcome back, James. Nice to see you.
Nice to see you again.
Let's talk about that 6% organic revenue growth. I haven't seen that in any of the companies, food, beverage, household products. What drove it for you?
I think it's a culmination of the work we've been doing over the last few years of reinvesting in our brands, reinvigorating them, making them relevant for the consumers, and with our new network of refranchised bottlers executing the marketplace. And it's allowed us to be, over the last number of quarters, hitting our long-term growth models, including a creditable 6% in this most recent quarter.
What about the macro environment, though? On the other side, it's gotten tougher. You're dealing with a stronger dollar, emerging markets issues. Can you describe what you're seeing out there?
Yeah, I think there's clearly, as we've gone through the year, the headwinds have got a little tougher. The macros around the world are perhaps softening a little, particularly in some of the emerging markets and coming into Q3. And we've seen that affect us in the exchange rate. Obviously, being in over 200 countries, we're bringing money from around the world back into US dollars. And that's gone against expectations and turned into more of a headwind coming into the second half of this year. So macro is weighing a little on us, but the underlying operating performance has allowed us to stay on our guidance for the full year and deliver a strong result in the third quarter.
Yeah, I think that was an important point for investors. What about North America? The U.S., James, actually was not as strong as the rest of the world with 2% growth. Thought the consumer here was doing great.
The business in the U.S. is doing well. There are a number of accounting adjustments that are going on this year in our U.S. business that have a mechanical effect of reducing the apparent level of pricing and the revenue growth in North America. When you look at what's happening in the marketplace, our business continues to be vibrant across many categories and across many channels. So we're still growing. We like our strategy of reinvesting for the consumer, growing value for our customers, working with our bottlers. It's working. There are parts of, and there are segments in the U.S. markets where you see a little bit of strain. But overall, I think the dynamic is good, and we continue to execute against our strategy and push ahead.
Inflation has been a really big theme on quarterly conference calls. You talked about it last time, said you were going to pass on higher prices to the consumer as a result of the aluminum tariffs and all the other cost pressures you're facing. How's that going? Are consumers willing to pay up?
Yeah, I mean, we've had to pass on increases in input costs around the world to the consumers. Clearly, what we focus on is trying to not just make it about the price on its own. We try and bring some innovation in the packaging, whether it's more interesting, more premium, or actually trying to make the packaging more affordable so that we can adapt the changes in input costs and really provide a bundle of things to the consumer that really continues to engage them. And I think that's what's allowed us to continue to grow volumes, even though we've had to pass through some of the input costs into price, because we're providing something that's interesting for the consumers.
Yeah, and I know that sort of wraps up once you've done that. When I talked to you earlier, James, we talked about the resurgence in Diet Coke, and you mentioned that millennials were finding it. How did that happen?
Yeah, Diet Coke in the US, it grew again. It grew in revenue, grew in volume. What's interesting is it's actually got more households coming into the franchise. The brand indicator scores that we look at internally are getting better. I think it's a combination of some marketing, inviting reconsideration for a generation where perhaps not all of them had connected to Diet Coke, with the flavor innovation, with the innovation in the sleek can, which is a more modern, more engaging package. I think that combination, executed by the bottlers, has brought people in, and they found something that they like in what is ultimately a great tasting beverage.
You know, this is the first time, speaking of great tasting beverages, we've had a chance to talk to you since some of the big acquisitions you've made over the quarter. Costa Coffee, obviously the biggest. The number one question I get, and I'm sure you get, on this deal was, why is Coca-Cola getting into the restaurant business? What are you telling investors, and are they still concerned about that?
Yeah, look, what we say is this is a coffee strategy. This is a coffee strategy. Clearly, the Costa has stores, and it's been a component of building the brand and building the experience. But as we look globally about what can we do in the coffee category, we see a number of very important opportunities that can allow us to be an even better provider of beverage solutions to lots of customers, whether it's in many of the immediate consumption channels and food service, with beans and machines, or they have a special vending machine, which is a bit like our modern freestyle machine that we have for sparkling beverages. They have a vendor for coffee, which is excellent. So there are a lot of immediate consumption channels. We can work with those customers and those channels. We can go to the at-home occasion with pods and beans and capsules. And of course, we can bring ready-to-drink coffee to many more parts of the world. Curiously, we're leaders in ready-to-drink coffee, but all driven out of our Japanese business, and there's a tremendous opportunity for that to expand around the world. What we needed, and what this acquisition provides for us, is a brand that has international portability and a supply chain and coffee capability that can allow us to execute at scale.
Not sure if you heard, even Indra Nooyi seemed to take a shot at you on her final conference call as CEO, James. She was asked about coffee, and she said the only thing we're not going to do again is get into the restaurant business. Well,
she's entitled to all her own opinions. I think what we're clear about is that we've got a coffee strategy, and that we see an opportunity to participate really strongly in a category that's growing around the world, in value, and I think there's a lot that can be done to be a better provider of beverages for every customer, including coffee.
Speaking of growing categories in the beverage space, it sounds like you're playing down the move and the development into cannabis after a report that you guys were looking into a CBD product. Can you just bring us up to speed? Because investors were really excited about that.
Yeah, I mean, look, we've got no plans in the cannabis or marijuana or CBD space at this moment. I don't see that as something that we'll be getting into anytime soon. It's just not something we're interested in.
What about BodyArmor? You really think you can go up against Gatorade? Is that the plan here?
Yeah, BodyArmor is a really exciting investment. We like the brand. We think they're doing very interesting things in the sports and the premium hydration space. And I think this investment provides us an opportunity to both expand the category and gain some share and provide consumers with more access to a great brand and a great product, and see where it goes.
Finally, James, just wanted to bring it back to the market conversations we're having here on CNBC, these wild swings and questions about whether we've seen the peak of global growth, of US growth, of earnings growth. Can you give us a sense of how those answers feel to you in light of the current stock market volatility? Do you think it's justified based on what you're seeing in the real economies?
Well, I mean, every sector is different and responds to changes in macroeconomics slightly differently. At least the Coca-Cola company, we're not that volatile. Clearly, it's very important to us, the trajectory of global economic growth. We continue to see continued growth, maybe a little bit of a softening that's come in, but there's strong growth out there. There are some countries that are having difficulties, and of course, we have to adapt there. But we see continued macroeconomic growth. But clearly we're moving to a different phase, and that will play out as we go forward. But what can we do in the end? We've got to focus on what we control. We've got to think about our brands, think about what the consumer wants, reinvest, and execute with our bottlers to create value for our customers. We've got to focus on what we can control.
And investors are rewarding you for it today and pretty much all year. James Quincey, always appreciate the insight on earnings day. Thank you for joining us.